a total banking collapse could be much closer than you think. You see, over the last few days, we've seen Silicon Valley Bank completely collapse. They filed for Chapter 11 bankruptcy. We've seen Signature Bank be forced to shut down. We've seen issues with First Republic Bank and Credit Suisse and many more companies that have experienced issues in the banking sector. So today's video, I want to talk about new rumors that have come out from billionaire investors, people who have tight connections in the industry that are saying things could be looking a lot worse and you need to prepare for this. So let's talk about it. First of which, I want to talk about what's been going on with the stock market. Over the last few days, we've seen with the stock market that there has been a lot of volatility. When we saw bailouts from the Federal Reserve and some major institutions for First Republic and for Silicon Valley Bank, we saw the market rise. We saw everyone get a little bit more excited saying, yay, things are going to be better. First Republic had commitments from Bank of America, Wells Fargo, Citigroup, and JP Morgan and Chase, who said that they're going to be contributing $5 billion apiece. They're going to be depositing that as part of a rescue package for First Republic. We saw that Goldman Sachs and Morgan Stanley said they're going to each be depositing like $2.5 billion into First Republic Bank. And we saw a lot of other smaller banks commit $1 billion. So everyone got excited when we saw this, and we saw the Federal Reserve say that they have this whole entire banking package where they're going to be able to inject like $2 trillion into the banking sector in the U.S. So this caused a bit of excitement. This caused a bit of relief. But now what we're seeing is that things look much worse than everyone originally thought, and they didn't look good to start with. I want to quickly interrupt today's video to bring you a word from our channel partner, DAO for Art. DAO for Art is a platform designed to produce decentralized autonomous organizations that create different forms of art, including PFP NFT collections, storylines, fictions, ACG contents, and many more things. And the way it works is DAO for Art has three main types of users. The first is the DAO creator, second is the canvas creator, and the third is the minter owners. And the cool thing about this platform is that it incentivizes collaboration and participation for all these different users and everyone on the platform, not just the DAO creator or just the canvas creator. And one of the most interesting features of DAO for Art is that it allows for the creation of new collections over time, and a DAO creator ultimately sets up the initial parameters for a new DAO, including the name, background story, manifesto, and starting floor price for NFT mints. In addition to this, the mint window is also determined, which is the time frame during which the mint event for the DAO collection lasts, and minters then can mint individual artworks from different canvas to form the final DAO collections. Compared to traditional NFT collection production, DAO for Art DAOs enables a collaborative workflow that involves and incentivizes all users from the very beginning, and the goal is ultimately to build bootstrapping DAO for all kinds of art DAOs to grow, and is the future of DAOs in my opinion. So this platform is revolutionizing DAOs and NFTs and is definitely worth checking out. So use the link in the description and check out DAO for Art today. Anyways, let's get back to the program. So first of which, what we've seen is that regional banks are continuing to slide. We've seen that First Republic Bank, after that $30 billion of deposits and everyone getting excited about that, has fallen another almost 35% in its share price since we had that announcement that they were getting $30 billion in deposits. Credit Suisse, we've seen another 7% drop in that. We've seen that the regional banking ETF is down another 6%. And we've just seen all regional banks continue to fall as people are worried about what is going to happen over the coming weeks. So what we need to be aware of right now are two main things. First of which is going to be the Federal Reserve and their up and coming FOMC meeting on March 21st and March 22nd. What's going to happen with interest rates? Because that could put more pressure on the banking sector, could cause a further fallout for regional banks, could be disastrous, or it could be good. So we'll talk about that. The second thing that we're going to talk about is rumors that have been floating around from billionaire investors, because recently Bill Ackman, billionaire investor, came out and said says that he's been hearing a lot of rumors that, let's say, Bank of America is going to be actually acquiring First Republic Bank. And that really is just the beginning. So when we're looking at what is going on with the Federal Reserve and the up and coming March 21st and March 22nd meeting, what we see is that now there's been a flip in what many top economists and analysts are projecting for this meeting. Right now, they're projecting there's going to be a 25 basis point rate hike in this up and coming meeting, as we recently saw the European Central Bank raise rates by 50 basis points. So many economists are predicting that we're going to continue to see rate hikes despite all the pressure that's being put on the banking sector. So that really isn't great, because what we're seeing is that there's a lot of pressure on regional banks right now. Things are starting to break, and by raising interest rates more, it's only going to put more pressure on these smaller banks. But the problem is that now that the Federal Reserve has also announced that they're going to be injecting potentially over $2 trillion over the coming year into the banking system, that is almost forcing them to raise rates even higher, because it's undoing all of this impact, all of these measures they've taken over the last year to bring interest rates back down, and the impact they've had on quantitative tightening, because they've been trying to bring everything back down, but now they're just injecting trillions of dollars into the economy. So it's like, yes, for now, this could help banks, but long-term impacts are going to be negative, because they're going to have to raise interest rates higher for longer in order to be able to combat this $2 trillion they're going to be putting back into the system. So something just to keep in mind. In my opinion, I think it's going to be good for crypto. I think it's going to help with that over the long term, because we saw back in 2020 when massive amounts of money were injected into the economy. Well, all that money was used to buy some of riskier assets. Crypto did really well. Some of the riskier tech stocks did really well. But that is one thing just to keep in mind. Second thing that's happening, like we said, was Bill Ackman. Bill Ackman recently came out and said that he's hearing a lot of rumors floating around that Bank of America is going to be buying Signature Bank on Monday. And this rumor is something that we need to keep an eye out for, because Signature Bank is a smaller bank. And what we're seeing is that with the Federal Reserve continuing to raise interest rates, it's going to put more and more pressure on regional banks. There's already mass fear among retail investors and consumers about their banks. People are asking relatives, is it safe to keep their money there? What should they be doing? And so ultimately, I think this could be the very beginning of mass failure of smaller regional banks. And this isn't going to be good for U.S. economy in general if we see small regional banks all across the country continue to collapse. So what we need to keep an eye out for over the coming days and over the weekend is going to be how this banking issue and this whole entire banking collapse and all this fear plays out, because last weekend we saw a lot of new details unfold. We saw a lot of work going on by regulators, a lot of big institutions meeting up to talk about what they need to do moving forward. But ultimately what we know right now is it's looking like we're going to see a 25 basis point rate hike. We need to see what happens over the weekend with more banks. Are we going to see more failures from some smaller banks across the entire sector? What is going on there? And potentially, is Bank of America going to be buying out and acquiring Signature Bank?